8% if Congress does approve the tax changes. For more, let's bring in the analyst behind the note, Manish Deshpande. Thank you very much, Manish, for joining us. An 8% hit to earnings. Why isn't it being reflected in the market at this point, if that's what's going to happen?
So I think the answer is that the 8% hit is, if all the proposals that the Biden administration has proposed in its fact sheet would get implemented. And that's a big if, I think. So right now, market participants are probably taking a wait-and-see approach to see if all the proposals that have been put forward can actually be enacted. So as you know, there is a very slim majority for the Democrats, and there is going to be a lot of probable changes that could happen over the next few months.
Yeah, Manchin's already talking about 25%, not necessarily as high as 28%. Where would you look to see a sell-off or a re-rating, certain industries or sectors or names that would be hardest hit by that higher tax rate?
Sure. So if you look at, so our approach sort of does it at a single stock level, so we can look at how the impact is across sectors. So if you look at the sectors that get impacted the most, as you might expect, they're mostly the multinationals. So that includes the technology sector, both the hardware and the software, some of the multinational healthcare companies. So those are the ones which should get hit the most. And over the last few days, those stocks actually have not underperformed materially. So if this was to happen, then those are the stocks which will get affected the most.
Yeah, you've said if a couple of times, right? That's the golden word here. But what's the reality? Like, what do you really expect is going to happen? And is this 8% predicated on the corporate rate going up to 28, as the president we know wants, but is highly unlikely given some of the commentary already from the caucus?
Right. So in terms of the numbers itself, there are three sort of separate proposals that the administration has put forward. Number one, as you said, is taking the corporate tax rate from 21% to 28%. But then there are two other measures. Number one is to also increase the amount of taxes that the multinationals pay on their foreign income. And the second, which is sort of a novel idea, which is to have sort of an alternate minimum tax based on the GAAP income, not the taxable income, but the GAAP income that the company reports. So in terms of the 8% number, that we calculate, about half of that is coming from assuming that the corporate tax rate goes from 21 to 28%, and the other two factors are account for the other four.
Shepard Smith here. Thanks for watching CNBC on YouTube.